Hello and welcome to Front and Center, presented by Lawyers Weekly. My name is Scott Ziegler from Lawyers Weekly, and I'm here today with Frank Licata of Licata Risk Advisors. We're talking about directors and officers insurance. With D&O insurance, perhaps the biggest worry of directors and officers is a suit by their investors, who usually are also shareholders. Coverage for this claim is the core value of D&O insurance. Some insurers, though, are trying to get out from covering this through exclusionary language in their policies. So, Frank, it brings to mind an article I read back late last year where there was a lawsuit against six out of the 9 current office directors and several of the former directors of Philip Morris. In a case where Philip Morris canceled a merger with Juul, and the Juul investors were the ones bringing the class action lawsuit against the directors of their company. So that is maybe a good segue to ask the broad opening question: what's the big picture? What does D&O insurance cover?
Well, good morning, Scott. Great to see you again.
Nice to see you.
That Philip Morris case is interesting. It illustrates D&O claims are extremely common, and directors and officers are rightly concerned about it, very concerned about it. In fact, when you're trying to fill a board position, one of the key questions before the person will agree to be on the board is to review the D&O coverage. So what does D&O cover? It covers management of the company. You know, you've got other insurance that companies have to cover other things: bodily injury, products liability, that's covered elsewhere. Environmental damage covered elsewhere. Even employment suits covered elsewhere. D&O covers the management of the company overall. So, who cares about that? Who's likely to want to hold you responsible for mismanagement or conflict of interest even? Lenders and investors. And investors are, if you're going to invest in the company in any significant way, you're going to want stock in the company. So you end up being a shareholder. And they're putting their money in your company, and they're putting their faith in your management of the company and the promises that you may have made about the company's performance. So that's the big picture of D&O. That's what we're trying to cover when we place, a negotiated D&O policy.
All right. Well, I mentioned exclusionary language earlier, and you recently wrote an article about insured versus insured. So why don't you tell us about the insured versus insured exclusion?
Every D&O policy, our issue today is about privately held companies as opposed to publicly traded. So every D&O has an insured versus insured exclusion, which excludes a claim by either the company against its management or the CEO against the CFO, for example, or board members against each other. The insurance is not designed to cover that. I mean, those are internal business disputes, and that's, that should be excluded, and we all accept that.
Okay. So is that exclusion a problem?
Well, it's not a problem in its ordinary and customary form, but we say you need to negotiate your insurance. You need to know what's in those policies, and you need to negotiate them. And not only from the get-go, but as they change from year to year. Now we're reviewing policies for our clients, and we scan through the insured versus insured exclusion. We expect it to be in there, and we scan the language, and we see, looking at a couple of policies. The first one we found was through a syndicate at Lloyd's of London, and the language in there included not only suits by stockholders, not only suits by insureds, but suits by shareholders. We step back and say, whoa, that's the core coverage. What are we doing here? So that's really not acceptable. That is totally unacceptable. and we say you should not live with that.
Okay. Well, then the big question, I guess, that everyone's asking is what can executives do about this problem with their coverage?
All right. Well, first of all, know that it's in there. You need to be able to read and understand and then negotiate the coverage. But know it's in there, and then understand that this is a small segment of the marketplace. We've seen it with Lloyd's. We've seen it with a couple of other insurers. But the bulk, let's say at least 75% of the market, does not try this approach on the D&O, on the insured versus insured exclusion. We hope it's not coming, but we don't want it to be a thing of the future. But as of right now, you can avoid it by knowing it and then moving to a different insurer to get your coverage.
Okay. Any final thoughts about director and officer insurance coverage?
Well, it's a hugely important coverage for the board, for the directors, for the officers. You think through who are the people who you are worried about pleasing by the performance of your company and not antagonizing, and who might come after you as compensation. If your performance isn't up to par. Well, lenders, yes, but even more so investors. And so VCs, venture capitals, firms, and private equity firms, they will often have a seat on the board, and that makes them an insured as long as they are not, as long as they have a separate entity which maintains the barrier between the person on the board who's an insured and the investment firm itself. So that's another thing to be careful of. So language is important. Make sure you're on top of it. That's all I can say.
Well, I think you've said a lot, Frank, but let's just say somebody has further questions about D&O insurance or any other insurance coverage. How can they find out more? How can they reach you and find Licata Risk Advisors?
Our website, Licata, my name is, you can see on the screen, Licata, add the word risk, licatarisk.com. Go to news and reports, and then click on the blog. And the article on this particular subject is there, and lots of other material and reference documentation on that site to help you. And then obviously call us when you need help. That's what we're here for. That's what we do every day.
Well, that's great. Thank you very much again, Frank Licata, president of Licata Risk Advisors. Thanks everyone for joining. Good day.
Thank you, Scott.